So what if I told you that $60,000 invested in the S&P 500 or Vanguard's VOO ETF could completely change the path of your financial future? In this video, we're going to break down what happens when you put that much money into VOO, how you can get there, and how long it'll take, along with the great growth potentials and returns that VOO has to offer. So let's get right to it. If you don't already know what VOO is, it's Vanguard's S&P 500 ETF. It's an ETF, or also known as an exchange-traded fund, and an ETF is just a basket of different investments like stocks, commodities, or bonds that are bundled together into a single fund. And this single fund can be bought and sold on a stock exchange, just like an individual stock. There are many different types of ETFs that are out there. Some may track different stock market indexes, specific sectors or industries, commodities, currencies, and more. VOO's strategy is simple. It's designed to track the S&P 500 index, which is the index that follows the performance of the 500 largest publicly traded companies in the US. And the S&P 500 represents about 80% of the total value of the US stock market, so you're basically investing in the US economy itself. Now, I want to go through the 4 key reasons why you should get a fund like VOO. First is for diversification. The 500 largest US companies that VOO holds are spread over a variety of different sectors and industries, and this diversification helps to lower your risk compared to owning individual stocks. For example, if one sector is not doing well and struggling, there's the opportunity for other sectors to help balance it out. And it's the same if one or some companies are doing badly, then you have hundreds of other stocks in the fund to help hold things together. The top 10 holdings that make up VOO include names that you're likely familiar with, like Microsoft, Nvidia, Apple, Amazon, Meta, Google, and others. So you're essentially getting a small portion of all these different companies. And the top sectors that make up VOO include technology, financials, consumer discretionary, and communication. The second reason is going to be VOO's solid long-term performance. Through the good and great times, along with the market downturns and recessions, the S&P 500 has consistently managed to offer solid returns with annual returns a little above 10% since 1957. VOO was created in September 2010, so about 15 years ago, and since then it's given annualized returns of 14.2%. The past 10 years, it's been 12.8%, and the last 5 years, 15.9%, which is pretty amazing to say the least. Now, this third reason is going to be low fees, and by that I mean expense ratio. VOO has a super low expense ratio of just 0.03%, meaning for every $10,000 that you have invested, you'd only be paying $3 in yearly fees, which you'll find is much lower than other funds on average, as well as actively managed funds. This fourth and last reason is that VOO is simple. You don't need to deal with researching and analyzing companies in order to pick the best stocks. By simply buying VOO, you're getting exposure to the best companies in the US market, diversification, and historically solid returns over the long run. VOO's passive income potential. VOO not only allows your money to grow over time, but it also pays you some income through dividends. And simply put, a dividend is a portion of a company's profits that are paid out to investors. Since VOO contains the largest 500 companies, that includes well-established blue-chip stocks that pay out those dividends, so you directly benefit from that. Currently, VOO has a dividend yield of 1.26%, but this yield has fluctuated from 1.2 to 1.5% over the past year, so this yield will vary based on the price of VOO. To give you an example of the way a dividend yield is calculated, let's say a stock is priced at $100 and it pays an annual dividend of $1.50. That means that the dividend yield will be 1.5%. Now, if the share price increased to say $125, then the yield would lower to 1.2%, and then the opposite, if the price dropped, the yield would increase. Now, you might be thinking 1.2% is a small yield, but you're missing the bigger picture, which is the power of those dividends being reinvested and compounding. For example, if we take a look at this chart of VOO over the past 10 years, we can see that there's quite a difference between the returns of just the price over these 10 years compared to total returns, which includes those dividends reinvested. The longer the timeline, the larger that gap is. So please do yourself the favor and don't sleep on the value of dividends, even if they seem small, because as you saw, they can really add up over time. Now let's talk about the real power of investing in VOO and how much your money could grow over time. The S&P 500 has provided around a 10.4% annual return since it's been established. And if you had $60,000 today invested in VOO with 10.4% annual returns, after 20 years, you'd have over $430,000. Talk about a come up. Now, if you had that same $60,000 and it was invested for 30 years, you'd have over $1.1 million. Pretty crazy the difference of growth in just 10 years. You can see here the real power of compounding and how the investment grows by larger and larger amounts in those later years. This is what you'd call the snowball effect. Your investment starts off small, like a snowball rolling down the hill, and over time it gets bigger and bigger, and it grows from compounding and reinvesting. Now let's say you hit $60,000 invested in VOO and you decided that you want to put more money in. Let's say $400 a month, so about $13 a day, which is like an average lunch for some. After 30 years, your total balance would be just over $2 million, and investing over 35 years, so just 5 years longer, would net you $3.4 million. It's pretty amazing to see how just $13 a day could amplify your earnings. This also goes to show how great and solid of an ETF that VOO is with its diversification, its dividends, its strong and consistent returns, which truly make it possible to hit that $1 million mark with just steady investing. So now that we know what's attainable with $60,000 invested, let's talk about how we can reach that $60,000 target. First of all, you don't need to magically come up with $60,000 to get started. This is a point that you build up to while investing in VOO. Now, how fast you can reach this goal will ultimately depend on how much that you're able to invest and stay consistent doing so. Whether that's $100 or a couple $100, more is always going to be the faster way in this case, but the goal is to continue working on increasing your deposits over time, as it'll only work out in your favor. To give you a better idea, let's look and see how much time it would take to hit $60,000 with different amounts invested monthly into VOO. Let's say you started investing $150 a month to work your way up to $60,000. That would take right around 15 years. If you doubled it to $300 a month, then that would take you just a little under 10 years. If we upped it again to $600 to work towards $60,000, then it would take 6 years and just one more month extra. And now let's say you're really going hard and you're able to put $1,000 a month in. Well, that's going to take you just 4 years to hit that $60,000 mark. So I think you see the pattern here, right? The more money that you can put in consistently, the faster it can grow and compound, snowballing you into some real life-changing money down the line. Regardless of where your starting point is, whether it's $100 a month or $1,000 a month, the most important part is getting started and staying consistent. Some planning along with some discipline will go a long way when it comes to growing your wealth. Next is the 3 things you must do with VOO for the best outcome. First, I'd say one of the most important principles when it comes to investing in VOO is simply to block out the noise and stay invested. The stock market always goes through cycles. You have the highs and you have the lows. And as you can see in the chart, the S&P 500 has recovered from some huge downturns, which historically has shown that not too long after, things end up turning around, and ultimately in the end, it still provided long-term gains. Selling when the market is down can have a big impact on long-term performance, and it makes it much harder to recover when trying to get back in the market later on, which is likely at a higher price. Trying to predict and time the market is nearly impossible, but you don't need to. Time in the market is what really matters. Which leads me to the second point, and that's automating your investing by dollar cost averaging. By that I mean setting up automatic transfers to your investment accounts. So whether you decide to invest weekly, bi-weekly, or monthly, you remove any possibility for emotions to interfere with you buying or not. And you could also do this to ensure that your investments like VOO are one of the first places that your money goes before you have any chance to spend your money on anything else. This helps you to stay consistent with investing through the ups and downs of the market. And the third thing you must do is to make use of tax advantage accounts. There's a variety of different tax advantage accounts such as 401ks, 403bs, traditional IRAs, HSAs, and more, but here I really want to hit on the power of a Roth IRA. A Roth IRA is an individual retirement account that you can fund with after-tax dollars, and your investments like VOO will have tax-free growth, and you can make withdrawals tax-free starting at the age of 59 and a half. This means the investments like VOO that you buy over the next 20, 30, and 40 years, and after growing and compounding, could easily be well worth over $1 million. And when you decide that you want to take some of that money out, it'd be nice to know that you won't have to pay any taxes. Just keep in mind that for 2025, the max contributions are $7,000 if you're under 50 years old and $8,000 if you're 50 and up. So be sure to try and hit the max deposit amount for this account every year. Now, if you didn't hear me hammer enough VOO in your head already, you'll be happy to know that VOO isn't your only option for a great S&P 500 fund. Here's a list of some other S&P 500 funds that you can come back and take a look at later, which all of these track the S&P 500 like VOO, just different brokers and whatnot. I also included some index funds as well. So whether you're just starting with $100 or you're working your way up to your first $1,000, the most important thing is to start today. Set up auto transfers, optimize tax advantage accounts, stick to your plan, and let time do the rest. Now, if you want to learn about some great funds that you can combine with VOO or other ETFs to make a rock-solid 3 ETF portfolio for long-term investing, be sure to check out this video here. And if you enjoyed the video, don't forget to hit the like button and subscribe for more content. I appreciate you watching, and I'll be seeing you on the next one.